Hello and welcome back. Now we are going to discuss about the part two of the banking abbreviations and their expansions and the terminologies and the vocabularies generally used in the banking, financial, and economic spheres. And you please don't forget to subscribe this channel, like the video, put your comments, and share this video also. Now let us start. FCY, foreign currency. FDI, foreign direct investment. FDI is an investment made by a company or an individual in one country into business interests located in another country. FED, Fed, Foreign Exchange Department. The objective of the new dispensation called Foreign Exchange Department by the RBI is to facilitate external trade and payments and promote orderly development and smooth conduct of foreign exchange market in India. FEMA, Foreign Exchange Management Act. The Foreign Exchange Management Act 1999 is an act of the Parliament of India to consolidate and amend the law relating to foreign exchange with the objective of facilitating smooth external trade and payments. FER, Foreign Exchange Reserves. Foreign exchange reserves are assets held on reserve by a central bank in foreign currencies. These reserves are used to back liabilities and influence monetary policy. It includes any foreign money held by a central bank. FMI, Financial Market Infrastructure. According to the Reserve Bank of India, financial market infrastructure or FMI is defined as a multilateral system among participating institutions, including the operator of the system used for the purposes of clearing, settling, or recording payments, securities, derivatives, or other financial transactions. FMOD, Financial Markets Operations Department. FMOD or Financial Markets Operations Department is entrusted with two primary responsibilities: conduct of liquidity management operations for maintaining an appropriate level of liquidity in the financial system for monetary policy transmission, and ensuring orderly conditions in the foreign exchange market through both onshore and offshore operations. The Financial Markets Regulation Department has been set up on November 3, 2014 in India with a mandate to regulate, develop, and oversee financial markets. FPI, Foreign Portfolio Investment. Foreign portfolio investment consists of securities and other financial assets held by investors in another country. It does not provide the investor with the direct ownership of a company's assets. And along with the foreign direct investment, FDI, foreign portfolio investment, is one of the common ways to invest in an overseas economy. Both of these are important sources of funding for most of the economies, especially the emerging economies. F sorry, FTP, Foreign Trade Policy. This is the policy pertaining to the foreign trade, the exports and imports. FTSC, Financial Times Stock Exchange. The Financial Times Stock Exchange, now known as FTSE Russell Group, is a British financial organization that specializes in providing index offering for the global financial markets. FVCI, Foreign Venture Capital Investors. The term foreign venture capital investor has been defined under Regulation 2G of the SEBI Foreign Venture Capital Investors Regulations 2000, wherein FVCI is defined as an investor that has been incorporated and established outside India and also registered under these regulations and also propose to make investments in India according to the necessities of these regulations. FX, foreign exchange. GC, global custodians. Custodian banks are often referred to as global custodians if they safekeep assets for their clients in multiple jurisdictions around the world using their own local branches or other local custodian banks with which they contract to be in their global network in each market to hold accounts for their respective clients. GDP, gross domestic product. GDP or gross domestic product is a monetary measure of the market value of all the final goods and services produced in a specific time period by a country or countries. It is used by the government of a single country to measure its economic health. GFC, Global Financial Crisis. This refers to the period of extreme stress in global financial markets and banking systems and in the global economies subsequently. GIFT City, GIFT City, Gujarat International Finance Tech City. It's a central business district under construction in Gandhinagar district in Gujarat in India. It's a business district between Ahmedabad and Gandhinagar in the Indian state of Gujarat. GNPA, Gross Non-Performing Asset. Gross non-performing assets or GNPA is the term used by commercial banks that refer to the sum of any unpaid debt which is classified as non-performing loans. GSEC, Government Securities. GSECs or government securities or government bonds are instruments that governments use to borrow money. These borrowings are done either to fund various projects or to fund the deficits. HQLA, High Quality Liquid Assets. The high quality liquid assets include only those with a high potential to be converted easily and quickly into cash. IBU, IFSC Banking Units. IFSC Banking Unit or an IBU means a bank permitted by the Reserve Bank of India under the Banking Regulation Act 1949 to operate from an International Financial Services Center, IFSC. It facilitates a base for world-class international banking services in the country. ICS, Indian Clearing System. It is related to the banking clearance system, a system for the settlement of payments interbank, etc. concerned. ICSD, International Central Securities Depositories. This CSD or Central Securities Depository International based in Luxembourg, which provide post-trade infrastructure and security services for the international market and 59 domestic markets worldwide with customers in 110 countries. IDS, International Debt Securities. IDS are issued outside the local market of the country where the borrower resides. They capture issues conventionally known as Euro bonds and foreign bonds and exclude negotiable loans. IES, Interest Equalization Scheme. IES, Interest Equalization Scheme, is one of the schemes. This is also known as interest subvention. The scheme was introduced with effect from 1st April 2015, and these are meant for the exporters, especially MSME sector exporters. And this is a rebate of interest provided on pre and post shipment export credit like packing credit. IGB, Indian government bonds, bonds issued by the central government of India. IMF, International Monetary Fund. India INX, India International Exchange IFSC Limited. The India International Exchange Limited, India INX, is India's first international stock exchange, which is under the ownership of the Ministry of Finance, Government of India. It is located at the International Financial Services Center, GIFT City in Gujarat. INR, Indian Rupee. IRS, Interest Rate Swaps. IRS, interest rate swap in finance, is an interest rate derivative. It involves the exchange of interest rates between two parties, especially two countries, with the help of the central banks. IRTGS, International RTGS. RTGS stands for Real Time Gross Settlement in the banking system. RTGS is a secure and reliable system used by banks for a variety of purposes, including high value payments, interbank transfers, and settling financial market transactions. International RTGS has international dimension. KRW, South Korean won. KYC, know your customer. KYC in the banking sector requires bankers and advisors to identify their customers, beneficial owners of businesses, and the nature and purpose of customer relationships. Banks must also review customer accounts for suspicious and illegal activity and maintain and ensure the accuracy of the customer accounts. LAF, Liquidity Adjustment Facility. LAF is a tool used in monetary policy primarily by the Reserve Bank of India that allows banks to borrow money through repurchase agreements, repos, or to make loans to the RBI through reverse repo agreements. This arrangement is effective in managing liquidity pressures and assuring basic stability in the financial markets of the country. LCBSA, Local Currency Bilateral Swap Arrangement. Since the financial crisis of 2007, central banks around the world have entered into a multitude of bilateral currency swap agreements and arrangements with one another. These agreements allow a central bank in one country to exchange currency, usually its domestic currency, for a certain amount of foreign currency. LCR, Liquidity Coverage Ratio. LCR or Liquidity Coverage Ratio refers to the proportion of highly liquid assets held by financial institutions to ensure their ongoing ability to meet short term obligations or liabilities. LCS, Local Currency Settlement. This settlement is a mechanism that enables cross border transactions between two countries to be conducted in their respective domestic currencies. It allows exporters and importers of both the countries to invoice and make payments in their local currencies, reducing the reliance on a third party currency such as the US dollar. LCY, local currencies. These are the currencies of a respective domestic country. LEI, legal entity identifier. The legal entity identifier is a 20 character alphanumeric code used to uniquely identify parties to financial transactions worldwide. It has been implemented to improve the quality and accuracy of financial data reporting systems for better risk management. LOC, line of credit. It's a preset borrowing limit that a borrower can draw on at any time that the line of credit is open. Types of credit lines include personal, business, and home loans, etc. LRMF, Liquidity Risk Management Framework. These management measures include enhanced guidance on liquidity risk governance, measurement, monitoring, and reporting to the Reserve Bank on liquidity positions. LRS, Liberalized Remittance Scheme. The LRS is part of the Foreign Exchange Management Act, FEMA 1999, which lays down the guidelines for outward remittance from India. Under LRS, all resident individuals, including minors, are allowed to freely remit up to US dollar 250,000 per financial year, up to correction. MAI, Market Access Initiative Scheme. The scheme was introduced by the Ministry of Commerce, India, as an export promotion scheme and also to act as a catalyst to promote India's exports on a sustained basis. MAS, Monetary Authority of Singapore, which is the central bank and financial regulatory authority of Singapore, just like RBI in India and Federal Reserve System in the United States of America.